What's going on, everybody? This is just going to be a quick recap of yesterday's CPI data release. We had some members catch very nice moves during the initial release, as well as some beautiful retest and continuation moves. But we also received some questions regarding this liquidity grab and why it was so deep. Now, first of all, we were considering three scenarios for the CPI. Scenario 1 being a very optimistic reading, right on the forecasted amount of 6.5% or even better. You'll most likely, in general, see price just give a straight push to the upside. Scenario 2 being better than the prior, but lower than the forecast, which would have resulted in a liquidity grab as we saw before the nice push to the upside. And scenario 3 being bad inflation data, which wasn't really on the cards for this release. However, we have to consider all scenarios. Now, what went down exactly is that we did see this massive liquidity grab right as the release came out, which to the naked eye might just seem like manipulation or whatever the average retail trader wants to call it. However, it's important to note that although it was a thousands of pips liquidity grab, price still respected this overall bullish market structure that we've been printing pretty much since last week Friday. And another thing to note is that the forecasted amount of CPI was 6.5%, already being very optimistic. So in the week leading up to that CPI, following the PPI data last week Friday, we can see how the market has started pricing in that release. The optimism already showed throughout the week, with US 30 moving nicely to the upside. Now, as the release came, taking into account this has already been priced in, as we had a 6.5% data release, which was exactly on the forecasted amount, we saw this huge push to the downside first. I'm just going to flip down to a 15-minute chart. Now, to the naked eye, this might just seem like a fugazi, but looking at the demand level that was left here on the 5-minute and the 1-minute, price came in and perfectly tapped it during the release. However, obviously, depending on what broker you use, there is slippage, there are massive spreads. So it's not to say you got that premium entry as the release came. But it was important not to panic at the time, as you only had a few seconds to react. With spreads and slippage on the table, it's not really ideal optimal entries, although it was at a premium price point. What we saw happen thereafter is after this initial push to the upside, price started chugging down to once again come and test better buy areas. I'm going to highlight that initial liquidity grab wick to come and test better buy areas, but also hopping onto the 1-minute for you guys just to make it nice and clear. Here we go. So we've got the initial liquidity grab, which happened fast. As you can see, it's 1 minute, 2 minutes, and then we're already on our way up. We advise members to look out for the retest and continuation entries. Once the dust has settled, spreads are back to normal, and it's exactly what we got. If you just take this liquidity grab wick, you can see how it perfectly came and 50%ed that little zone there that was created, also lining up nicely with this market structure trend line we indicated on the intraday timeframes. And there you got another nice push to the upside of a couple of thousand pips. But now it's important to note that just because you missed the initial liquidity grab entries, as well as the retest entry of key levels and this little zone here where all the orders were lying and where smart money came in and accumulated more buy orders before pushing up, it's not to say you couldn't have taken another entry. So we saw price push back up, create a bit of consolidation there before printing these three. You can see it nice and clear on the 5-minute, these three massive bullish candles, which we then could have used as another opportunity to enter straight off this fresh fresh lower time frame order block. We did see price range in that region a bit, but it pretty much just provided more opportunities for entry as smart money was collecting more buy orders, where by 7 o'clock that evening we saw another nice push to the upside. And again, you had another opportunity to enter right over here. As we know that US 30 and the way she behaves, she moves in waves. The market is fractal and order flow is adjusting constantly, even on these lower time frames. So there will always be more opportunities to enter. Again, another opportunity to enter over here. Obviously, we don't trade that late at night as volume is generally low. But just to show you guys that just because you missed the initial entry and you didn't catch that premium entry as the release came out, there is still lots of room to make money here. Many entries available, many opportunities to scale into price again. But what's important to understand is the actual impact of the release and the fact that we were going to go bullish regardless of how many liquidity grabs we saw in this area. Price was always going to go and print a new intraday high. So what can we expect moving forward for today and going into next week? So currently our sentiment is stock market bulls, as we just got that positive inflation reading, and we are going to have to wait to see what other fundamental catalysts come into play that could affect the order flow that we see. From a global traders hub point of view, we could most likely see a little grab to the downside before continued upside to 34.5, maybe even 35,000. As you know, we had that on the cards. However, it could even be a little bit deeper, possibly retesting those wicks one more time, lining up with the intraday order block before we see a continuation. Or we can just see price ranging for the duration of Friday, coming down to these better buy areas, and then market closing with a slight pullback before the end of the week. So we are going to not probably take any more entries for the rest of the week as we wait for the new week to come in and see what Fed speakers have to say with regards to the inflation reading we just received. But I wouldn't be taking any sells on US 30 unless we can break below this little order block where the liquidity grab conveniently came and spiked to. I think it'll be very wise to only take sells below here with your stops back above that order block. I'm personally bullish until we receive some form of Fed speaker that gives some hawkish remarks or some bad data releases that could take away from the pivot prayers and feed back into the dollar domination sentiment. For now, we'll just be looking for some buys from better buy areas, pullback phase with continued upside. I wouldn't advise over trading today, as the markets could just be in a range and you could find yourself stuck with some emotional damage. Hope this made sense to everyone. Please take note that CPI releases always react differently, and all we can do is lay out possible scenarios and react accordingly and follow the smart money, not follow your emotions or predictions, as we are trading a very big whale of a global financial market, and your best opportunity for the best entries and the highest risk to reward is by following the major banks and hedge funds, the whales, the smart money. We'll catch you guys next week with another update. We'll also be running a little educational session on YouTube for our members. It will be open for anyone to join. We'll confirm if it'll be Saturday evening or Sunday evening. But yeah, hope everyone made some money, trade safe, and we'll catch you